Hello traders, this is Alla 1:49 EST, May 2nd. Before FOMC, before the most important financial news in US. We were open this morning and price was at this Fibonacci support as we discussed before we closed the room. This was Fibonacci resistance, correct? This was a brick wall as we discussed in the room. This is where price is heading to. This is key target. Key target reached, price broke through this target and went to where? Once again, reversal zone. Is everyone seeing this? This is exact same strategy as you witnessed on all long-term instruments, as you will witness once again next on S&P in front of you, this hourly chart. Once again, this is a chart you can convert to 1-minute chart at the time of the news released. Once again, this is a chart you can use for all the day trading charts, including 5, including 15. 1 minute will remain here on purpose. Bias at support is bullish, especially will be extremely important if price will collapse all the way down to reversal zone. This is institutional support, this is daily chart. This is the chart present in front of you since last year. At trend inception, Fibonacci reversal zone, our bias remains firmly bullish. Just like once again being in a play yesterday morning in a trading room when price was at reversal zone, which is exact same thing you're witnessing right now on 1-minute S&P, except it is resistance. No need to wait for hours, days, and years. On long-term charts, you're witnessing it instantly in live markets on short-term day trading charts. So, again, price collapsing to here, our bias is bullish. Price is sitting at this support, bias bullish. Ideally, we would like to be at trend inception as low as possible. We have no idea what the news will be, however, we know extremely clearly. If price will skyrocket to this resistance, bias is bearish, as you witness in a play in live markets on April 30th. These levels can remain in a play on all day trading charts, 5 more minutes, 5 more days, or 5 more weeks. All depends on Fibonacci rules you learn in the course. So, let's review and let's prepare. So this is very powerful reminder, and this is the levels that have been present in front of you for the last 2 weeks. This is the levels you use on any chart you will choose to trade. Why S&P this morning struggling at this resistance where S&P continue finding selling pressure? This is first brick wall, and this is where we're expecting selling pressure. And this is where our bias this morning remained firmly bullish. No matter what chart you traded, no matter if it's 1, 2, 3, 4, 5, 6, 7, 11-minute chart, no matter what you trade, strategy remains the same. Risk management and trader psychology is the only difference. Once again, this is exact same thing S&P had done on weekly. Trend inception 1800 number. Exact same thing S&P had done on weekly. Trend inception ultimate resistance. S&P selling off. Exact same thing as you witnessing on 1-minute chart this morning. Identical Fibonacci levels. Only difference, risk management and trader psychology. Only difference if you're holding position 5 minutes, 5 hours, 5 days, 5 months, or 5 years. That's what you're witnessing in the trading room every day. The accuracy of the method on 1-minute chart. And that's the trade this morning. And that's exactly the reason our bias at support is bullish, our bias at resistance is bearish. Lower the price will collapse, better off we are for ultimate bullish point trend of entry only if rules are met. So just in case you missed oil news this morning, powerful reminder, all been recorded on live video. As oil reminded you, news does not mean a thing, as our bias here was completely bullish. And as we discussed before we closed for a break, this is ultimate brick wall on oil. Oil staged bullish rally from 66.95 until 67.70, 80 ticks, reminding you trading on the news will never work. Trading based on pure price for entry and Fibonacci for exits does. And to remind you, this is exact same structure we're monitoring on S&P next. If S&P collapses to reversal zone, it's a gift. So, caution traders, please, as this is once again levels present in the room for weeks. Will be in a play on S&P very, very shortly, as I'm converting this chart to 1 minute chart. Chart present in front of you for weeks. No matter what the news is, at Fibonacci reversal zone, our bias is bullish. At Fibonacci resistance, our bias is bearish. Target rate range, as expected, held at 1.5, 1.75. Let's pay attention to price action and Fibonacci levels. So once again, we allow price to settle down. Once again, at Fibonacci support, our bias is bullish. Our bias had been bullish since pre-market, since 9:30 this morning. This key support. Everyone seeing this? Our bias had been bullish in a trading room since yesterday morning. At trend inception, Fibonacci support. And do you remember what this is on the trade before we left on a break? This is a reversal zone. Price reminding you, do not ever enter into. Allow price to settle down. Point of entry at drastically lower levels, nowhere near here. Knowledgeable trader knows how crucial it is to wait right now for a pullback and not to touch the market. Absolutely essential and crucial, as you're witnessing very powerful reminder in front of you. Reversal zone is reached. No matter how bullish news is, pulling a trigger, never an option. Was not an option on oil when oil was at ultimate Fibonacci support despite bearish news, is not an option right now. If you are interested in long-term success, powerful pullback currently is crucial. Absolutely no surprise whatsoever what price is doing. Reversal zone is reached. Overextended bullish rally projected since early morning. So lower as S&P collapses, more interesting market will become. If S&P will collapse right now 20 points, it will be a gift. If S&P will collapse to this crucial Fibonacci support, you will see another powerful reminder that this is in a play not just on S&P, this been in a play on Apple yesterday at the time of earnings. Chart present in front of you for years. Do you know what to do with Apple when it comes to this resistance? This is your investment decisions. This level is out, Apple skyrocketing to here and here. Key support in a play. Identical structure as on S&P prior to FOMC. And again, if you missed all the events this morning, they will be posted on YouTube, as bullish rally started here. So how did we know this will be a major problem? Fibonacci said so. Clear on that? Look at that. Shock or not, no matter what chart you trade, Fibonacci resistance present in front of you for weeks, finding selling pressure. Ultimate reminder, enter trade at trend inception, never enter into resistance. ultimate reminder, exact same formula applies to your investment decisions. This was ultimate brick wall on S&P at 2200 in 2016. End of minor trend broken 6 months later. S&P skyrocketed to 2300 and 2800 as identified years in advance. And this is what's in play currently on 1-minute chart, 3-minute chart, 5-minute chart. Any chart you will choose to trade, accuracy remains the same. We're monitoring for short. 5, 6, 7, 11 trades can be in front of me. Knowledgeable trader chooses trades that's appropriate to his account size. Knowledgeable trader has bracket orders set up with stop limit settings activated. Not limit, not market, stop limit only. If you do not have those settings activated, you're trading against yourself, not something you want to do. Jean. So this is what played out in the room before FOMC. Pablo 2.5 points, Jean 4.7 lots, Carol 4.10 lots. That's the reason students becoming my dearest friends for life. So, in case you missed all the discussions early this morning, traders like Pablo holding the bar very, very high for everyone. Why? He is a complete beginner trader. You can listen to him on the website. As Pablo accomplished his quota before trading day even began. His testimony is the latest one on the website. So, S&P doing everything we expected S&P to do. Everyone witnessing this, never buy into resistance. Monitor for long at support. Very important and very powerful formations, very interesting structure in a play. Gernard, Carol, Jean, Pablo know so. Do you? Jean also trading options long-term put credit spread with 12 points on 5 lots. Once you learn the method, all you have to do is identify what you want to trade. Price collapsed from this resistance. What is the problem with this collapse? This support to the downside. If in the next few minutes this support is not out, this pullback remains extremely weak. Knowledgeable trader knows how crucial next few minutes are. Knowledgeable trader knows this support is out. This is where you will be monitoring once again for ultimate trend inception entry. This support is not out. We're dancing in the middle of the trend in very weak formations. As most important rule you learn in the course, in a play in front of you right now. Key moment on S&P. 1 minute to go, traders. S&P holding this support once again, just like Apple, just like CRK, just like Ferrari doing as key resistance. Identical formula across the board on all these instruments. And that's S&P, ultimate support, ultimate resistance, just like on Apple yesterday morning, as expected. So exact same support as you're witnessing on S&P 1 minute chart is what Phil had done on CRK. Phil is also trading oil. As once again, in case you missed oil news this morning, all been recorded on live video. As oil reminded you, shorting into Fibonacci reversal zone will never work. Horrific bearish news on oil. How many points is oil up, traders? This is where oil is heading to. Many points up. 150, not the place to short into. Will be so lovely if S&P will crash and burn to this reversal zone, where, if you remember, S&P had been yesterday morning and S&P had been early this morning. Lower price crashes to the support, more interesting price will become. Problem is, this support holding the selling pressure. You can do it, S&P. Give us more. Only then market will become interesting. Trend inception is a key to your success. Bullish rally overextended. We're in the middle of the trend, sitting at ultimate Fibonacci support with very weak buyers, as expected. Buyers so pretty darn weak. This is your range. Knowledgeable trader knows that. Knowledgeable trader knows extremely well. The only good thing that will happen right now, if price would crash and burn through this support. Buyers extremely weak. You choose to participate in long trades in this market. Range is very narrow. So Joseph, hedge fund manager, while we're waiting on S&P, asking about GLD 1440. Joseph trading ETFs using the method, including gold. Finally, ladies and gentlemen, once again, we are on the right side of the market. And once again, as I warned you, 26.48 and a quarter is a brick wall. We've been here for the last 30 minutes. Will S&P finally crashing and burning to this support? Just to remind you, in case you missed prior, this is where selling pressure came from. My goodness, the power of Fibonacci never ceased to amaze me. At resistance, bias bearish. At support, bias bullish. Identified weeks in advance. In a play on 1 minute chart. Every day, every time, in front of you. Knowledgeable trader right now adjusts his trail very, very carefully. This is where market will become very interesting if buyers will step in. Crawl is on. And that's what knowledgeable trader does every single time. In the course you learn to respect this target as your key target and move your stop outside of break even and scale out accordingly. As to remind you, when was this ultimate reminder when it comes to your investment decisions? This was on monthly at 1800 number, ultimate support. Do you remember that day when it was respected? Do you remember that S&P spelled out that it's heading to 2800 because support was respected? Reached 2 years later? Knowledgeable trader knows the importance of this level. Once again, we are on the right side of the market. Once again, knowledge is power. Hand holding in trading never works. Only knowledge does. Look at that, shock or not. We knew that this would be key target. We knew that moving stop outside of break-even is the key. Key target is reached. So GLD sitting at exact same target as S&P 1 minute chart. As again, hedge fund manager in the course, Joseph trades GLD. Everyone seeing this? Exact same formula as you saw on S&P monthly. Exact same formula where S&P 1 minute chart reminding you. If you will ever disrespect this as your target, success is not possible. If you choose to ignore it as your target and not move stop outside of break-even, you're creating your own strategy. This is ultimate reminder. Every single tick in day trading matters, but exact same formula applies to any instrument, any time frame you will choose to trade. And again, ladies and gentlemen, this is oil. This is the levels present in front of you for weeks. In a play every day. Every time I bring in oil news at the time of news release. Oil sitting at decision point 2, present in front of you for weeks. Oil skyrocketed already from 66.90 to 68. Bearish news once again does not mean a thing, as Fibonacci reversal zone reminding you very clearly. Fibonacci will override any news. Why spend your time on delayed indicators? Why trade on the news? It will never work. Respect news due to volatility only, and recognize the only thing that works in life is knowledge. If you master price action and Fibonacci, you can trade any instrument you will choose to trade. Everyone clear how crucial this target is? The same as 1800 number you saw on monthly? The same as GLD? No surprise. Every single tick in day trading matters. Price staging pretty impressive reversal. So if you would like to join us in the course and learn how to trade proprietary Fibonacci strategies that apply to any instrument, any time frame, and any platform, please review the information on the website, and I look forward to hearing from you. 925-257-4298 or info@fibinstitute.com. All classes are live. Group session 8 weeks, private mentoring 16 includes all group sessions. In private mentoring, I can work on your execution and instrument of your choice. Any questions? Never hesitate to contact me 925-257-4298 or info@fibinstitute.com.